Okay, good morning,
Right.
everyone.
Good morning, everybody. Welcome to today's webinar. My name is Jane Stevens. I am the training manager here at Zolo. We are talking about Zolo Mortgages. We have Mahir here, who is going to walk us through exactly what they do and how they can help us. I know we recently did a webinar with Zolo Mortgages just last month. We do a webinar with them every month. But the reason why we're introducing it so quickly again this month is because we have talked a lot this week about leases. And really, there is an opportunity to sometimes to convert those lease leads to buyer leads, especially if you have a lease lead who has a large deposit to put down. Maybe talk to them about, the possibility of buying a property. So what questions do you need to ask? What do you need to know as a realtor? How can you send those leads to Zolo Mortgages? That is what Mahir is going to talk to us about today. So welcome, Mahir. Thank you for joining me.
Hi, everyone. Thanks for having me here. Excited to be here. Today's topics are going to be a little bit different. So if you have attended the previous Solo Mortgages webinar, get ready for some new topics, some new content. I've gone through and updated the slides. So we should be covering some interesting topics. Here's our overview for today.
Mahir,
I'm
do
just
you
going
mind
to
if I just jump in before you get started?
sure,
We
sure.
have a poll here just so that you, Mahir, know who is joining us here today, what their experience level is. So if you don't mind, I'll just launch that now so we can get some feedback from the audience here. So there are a few questions that hopefully you guys see on your screen in terms of how long you've been licensed, how many transactions you've done so far, and if you have a mortgage broker that you're currently working with. So again, Mahir's going to talk to you today about Zolo Mortgages, but if you can answer those questions, we'll just give it a minute here while you're answering these questions. Awesome. And
Cool,
John is
yeah.
joining me here today as the producer. John, if you want to share these results, can you see it on your end?
Certainly. Results are coming in quickly. We'll just give it 15 more seconds before passing the mic back to Mahir.
All right.
Very good. So the answers are in for the questions, and I'll just share the results on the screen. So are the results up on the screen? Can you see those, Mahir and Jane and attendees?
I can see them. Hopefully everybody else.
Yeah, so exciting. First question was, how long have you been licensed? About 56% of attendees this year, a third of you more than 2 years, and 11% of you more than 5 years. Exciting to know how long people have been in the industry. Also, question 2, how many transactions have you done in your career? Fewer than 2 is a third of you. 3 to 6 is 22%, 6 to 10 is 33%, and more than 10 is 11%. And the last and perhaps most interesting question before we go back to Mahir is, do you have a mortgage broker that you usually work with? The answer, 67% of the attendees said yes, and 33% of them said no. With that, we'll pass it over to Mahir, and I hope that gives you some context on who's in the room today.
Awesome,
Okay,
thanks. Over to you, Mahir.
Yeah, thank you. That really helps, actually. That's a good indicator of where everyone is. Luckily, the slideshows I've presented should be good for you regardless of your skill level. I'm just trying to see here, how many transactions? Okay, interesting. Yeah, I think that even if you've done less than 2 transactions in your career, you may have some experiences where maybe those transactions did not go smoothly during the mortgage financing process. And that's kind of what we're here to address. So that's one aspect of the transaction. We're looking at the end of the transaction, but we're also looking at the beginning of the transaction today. So um, I think one of the questions I get the most is what what is the demographic, or what is the kind of client that I should be working with? And that's those are the programs that I'm going to cover today. So this is today's topics. It's going to be the intro. I'll just introduce briefly Zolo Mortgages, who we are. I'll go over some of the rates. We may even cover some industry news. We'll do a brief program overview, and these are the programs I'm going to be covering, which is just the standard purchases program, the new to Canada programs, the self-employed programs, the high GDS TDS programs, and finally the alternate and private lending programs. And at the very end, I'll be sharing with you some tools that you can use just when you're doing your a buyer consult, which I think are really beneficial to kind of understand with the client where they are in the buying process and to set realistic expectations for the transaction. Um, so let me see here. So first slide, we are at Zolo Mortgages. We are the sister company to Zolo Realty. So we work in tandem with the real estate agents here. We are currently licensed in Ontario. By the middle of this month, we will be licensed in BC. The plan was this year to do Alberta as well as BC, but things didn't work out in Alberta. So we're looking at some alternative methods to submit deals in Alberta, and I may have an announcement on that by the end of the month as well. So by the next meeting, we should be able to submit deals in Alberta, but we'll be licensed directly in Ontario and BC. How do you refer? I think that's one of the most important questions I'd like to answer today. Um, there's a couple of methods that you can use. Essentially, what is important for you to understand is when you're doing a referral, you can copy and paste the CRM link for your clients into an email to us directly. So our email is mortgages@zolo.ca. That reaches me directly, actually. So I'll be your point of contact. Once again, my name is Mihir. I'm the principal broker on the mortgage side. I did have a slide before that introduced me. I realize we're all kind of working remotely, so you may not, see me in person anytime this year, but we will meet eventually, I think. Um, my direct number is 416-568-1751. You can reach out to me with any questions that you have. I try to help agents out with pre-qualifying as much as possible. And that's actually a program that we're running, really, really sort of pushing to the real estate agents this year, is that Zolo Mortgages issues pre-approvals on company letterhead for your buyer clients so that they are able to comfortably make a decision as to what they can purchase. And for you as a real estate agent, that's also some form of leverage with our pre-approvals. I'll actually get into that later, but let me hop into the current rates here because I think this is really important for you to share with your current buyer leads. We are extremely aggressive with our rates currently. On the A side and on the alternate side, the rates are literally at a historical low. On a 5-year fixed, we're doing 1.34%. That's literally free money. On a 5-year variable, we're at 1.25%. It's important to note that this is not the rates. These are not the rates we use to qualify clients, but these are the contract rates. So these will be the rates that we use to create their payment. That's what I'm trying to allude to. So 1.34 fixed, 1.25 variable. When you're having your convos with your buyers, when you're following up, make sure you slide that in there. It's going to be really, it's going to increase your conversations with the client. So hopefully when you slide the rates in, you can sort of get a conversation going where you can find out a little bit more about your buyers. And it's important that you do know things like, hey, have you checked your credit score recently? Could you give me an idea of how much cash you have available? So sometimes when you're speaking with a buyer, they give some really vague answers. It's okay to probe, ask open-ended questions when you are speaking with buyers about their down payment specifically. Things like if you say, hey, how much do you have how much do you have available for the down payment for this property? They're going to give you an answer like 5%. 5% of what is usually the question that I ask. Exactly what is the dollar amount that you have available? I think that's the most important thing to know because that actually gives you the flexibility of giving the client some options. And what I mean by that is if, let's say, the client has over $100,000 to play around with, we can qualify them with 20% down and we can actually increase their buying power. And we're going to talk more about that later. But what's important for you to understand is that on the A side, does everyone qualify? And the specific answer, the short answer is no. The qualifications on the A side. So for the rates I mentioned there, around 1%, 1.34%, qualifications are based on the client's existing debt and credit score. It's really important that for you to understand that when Zolo Mortgages is doing pre-approvals, we're pulling hard credit reports on these clients. So what that means is that we get a real idea of what the client's buying power is. The qualification ratios are hard at 3944, and they're based on the client's credit score. So 600 plus, 600 is the bottom credit score that we're able to look at on the A side. That's we have a lender who lets us go that low. But if the client does have missed payments, or if the client, what I've seen recently is they may have consumer proposals, but their credit score is still relatively high. We may have to get some explanations as to why they've missed those payments. It's something that we're seeing a lot of nowadays, where when clients have reduced hours at work because of COVID, it starts to really affect their ability to pay bills in full on time. So sometimes we have to get explanations. Luckily, lenders are being a little bit more lenient. They've really tailored some programs to the current situation with COVID. So we do have programs available still. And if a client does not qualify, do we have alternate lenders that can help them out? Yes. And actually, the alternate lending space is something that has grown almost exponentially during the COVID, during the pandemic, essentially. Two reasons that have contributed to this. One of them is quite obvious, and I've already kind of mentioned this, is clients are deferring payments, or clients are missing payments, and that means that their credit is affected. So when credit is affected, alternate lending is really key. The other reason is one of these things was completely unexpected, which is that the home prices have skyrocketed. And with alternate lending, the benefits that we can offer the client is a higher buying power. So someone on the A side who has 20% down and may qualify for, let's say, $700,000, we can actually qualify them at contract rate on the alternate or near prime side. So that means that they can go from 700 and increase their buying power by almost 50%, because we're going from sometimes from 4.79% qualifying rate to 2.99. I think that's one of the lowest qualifying rates for contract rate that we have, and that really increases buying power for your clients. So most of the time, the limitation is going to end up being what the client's max down payment will be, because we can get them approved at near prime rates for pretty much any purchase in today's market. So we have a lot of options. We've really built this business not around, let's say we've built the business to be a service to the real estate side. That's really what we're tailoring it for. A lot of mortgage brokerages they're sort of focused on going to the client direct, and maybe they don't have a specific purpose other than just to close a deal. Ours is to try to service the real estate side as much as possible, and that's to facilitate business in multiple ways, not just lowest rates, but what we're seeing a lot of demand for now, as I've kind of covered, is higher buying power. So we do have that ability, as compared to banks. Mortgage brokerage can actually qualify your client at higher buying power. So bring them into us, let us qualify them. We'll give them a couple of numbers, and I'll cover the pre-approval process a little bit in further detail.
So Mahir, I just wanted to jump in there. That last slide was really interesting, talking about leases all week, and trying to find opportunities to convert those lease leads to buyer leads. It seems landlords have a higher qualification criteria than what you've stated here. So 650 plus, 700 plus is what landlords want to see in terms of credit score. And you mentioned 600 plus, and if there's a consumer proposal, there's still something that you might be able to do for them. So definitely, I just wanted to highlight that, so that when the agents are out there meeting lease leads, and again, they have a high deposit that they're willing to put down, put them in touch with Mahir at Zolo Mortgages. There may be something more that you can do.
Yeah, exactly. Jane brings up a great point where, in still often competitive markets and leases, if your clients are offering the landlord 1 year of rent up front, why not see if we can qualify them with that 1 year rent for down payment. And that's going to end up being a lot higher commission to you. And I think that the Zolo real estate model for the lease side is essentially, you kind of have to eat the cost of a lease to potentially get a referral for a buy in the future. Why wait for that future buy? Let's do it now. So great
Absolutely.
point, Jane.
Yeah, thanks.
Okay, so let's keep moving on here. I'm going to cover a couple of programs. This one is the standard employment program. And this is specifically, these are the criterias that we look for on the A side. When we have a Canadian citizen or a PR, we can kind of say, okay, great. That brings you to a point where we're looking at the lower side of the rates. The legal status is important. What's also important is the type of income that they have. So when it comes to standard employment, if the client is full-time employed, which is provable by pay stub or job letter, part-time or hourly income, these are all incomes that we can sort of annualize, and we can use all aspects of that income to qualify a client. So let's say they're full-time employed and they're making bonuses, or they're full-time employed and they, for whatever reason, they may have other benefits from work, sales benefits. Let's say there's a partial guaranteed income, but then based on sales performance, they may get a bonus or a percentage of the sales. We can actually use the entire income there to qualify a client. We use 2-year notice of assessment income or 2-year T4 income to qualify the client, which is um, where you would see most of the income. Sorry, I was just distracted by an email. The established credit history is actually quite important when it comes to standard employment. What lenders refer to this as is covenant. The covenant is important to really judge a person's ability to repay a loan. And remember, like, when you're a lender and you're giving away money at rates that are basically free, the risk tolerance is extremely low. Like, you really want to look at the credit history, the credit repayment, the established credit history to ensure that this person will be able to pay back the loan that you're taking an extremely high risk to lend out. So if you are speaking with the client, just make sure, hey, do you have a credit card? Because we're seeing people who've lived in Canada their entire lives, and especially when you're dealing with rural neighborhoods outside of urban centers, there's a lot of people who avoid credit, because maybe they're just, that's the way that they were brought up, essentially. We have a lot of people from the smaller towns in Ontario who really try to avoid credit cards, and it kind of hurts them when it comes to mortgage purchases, because without a credit history, if you're a Canadian citizen or PR, we're not able to qualify you either on the alternate side um, or the A side. So established credit history is important. Accumulated down payment in Canada. Down payment in Canada can refer to money that has been collected from multiple sources. It's from income, from investments. It can be gifts from direct family members. And we try to crack down on this as much as possible, because clients are like, hey, look, my friend is willing to lend me $50,000. Can we use this as gifted down payment? Unfortunately, the answer is no. On the A side, gifted down payment is limited to direct family. That's mother, father, siblings. It could be in-laws. Um, but beyond that, it starts getting really murky. When it comes to cousins, gift letters are often not allowed. So yeah, the good part of the gifted down payment program is that for the most part, on the A side, beyond signing the letter of gifted down payment, there's no further proof required. Like, we're not backtracking down payments through the parents' bank accounts in most cases, for example. It's just sort of, we need a signed declaration. As I described, income qualifying is really important as well. So based on the client's income type, we have to make sure that they meet the ratios, which are 39-44. 39 is our gross debt service. So that's total loan payments over a year over yearly income. That's gross debt service. And total debt service is the yearly payments for the mortgage plus all other debts that the client is paying annualized over the client's annual income. For the standard purchases, so for those low rates that I mentioned, around 1.34 fixed, The property has to be bought in the personal name of the applicant. We can't do purchases under corporations for any reason at those rates. We can include co-signers or guarantors, which is really important when the client may not be income qualifying, or if they're younger and they may not have a fully established credit history. We have seen people basically as young as 18 looking for investment properties. There are people who come to us and say, I have a trust fund, I have the down payment, and I'm starting to make income. Can I use the money from the trust fund towards purchasing an investment property? And they're quite young. I mean, they're like under 20, some of these people. So the answer is the credit history, if it's short, we may need the parent to be on file, which is totally fine. And for the standard employment program, we can do purchases, refinances, and switches. I'm just realizing now that I missed out on a program here that may be important. I'm not going to cover this program here, but I think this is worth exploring, which is our reverse mortgage program. Um, we've actually done a couple of transactions with this, and you know what? I'm going to do a separate video on them, and I'm going to post them on the workplace channel. Actually, now that I brought that up, maybe now is a good time to.
And actually, while you're looking that up, we do have a question that came in about credit history and
Sure.
how it's established. Is it credit cards only, or is it associated with bank accounts?
So it's not associated with bank accounts in particular. Credit history is always based on what kind of it could be credit cards, it could be loans, it could be cell phone bills, it could also be utility bills. Those are sort of the categories that help establish credit for clients. Let me just see if I can get the Zolo Mortgages um, channel here. So does that answer the question effectively, Jane?
Yes, thank you.
Okay,
And we
perfect.
also have another question coming in. Just if you can repeat, please, the GDS and the TDS again.
Yes, the GDS and the TDS on the A side are 39.44. If the client doesn't qualify at those ratios, we still have programs that allow us to go 55-55, the GDS, TDS on the alternate side. And if those ratios don't work out, we can go into private lending where there is no cap on the GDS, TDS side.
Perfect, thank you.
I'm going to keep going here. Just give me 1 second. I wanted to cover this part, guys. If you're not part on Workplace of the Zolo Mortgages channel, please join us. We like to provide our updates here to the brokerage on the real estate side. Our New Year's resolution for 2021 was to update this on a more regular basis. So usually weekly, we're coming through and we're updating our rates. After this webinar, we'll be updating the rates based on the slideshow I just showed you. So we're being extremely aggressive with the rates here. And if you do want to share these with your clients, for example, just to, if they say, hey, look, what are your rates? Just come on Workplace, grab one of these slides that I've created, and you can just email that over or send it as iMessage or WhatsApp to your client. These are all compliant in terms of advertising for the brokerage.
Perfect. Can you still get these low rates for investment, so non-owner occupied properties?
Um, we do have low rates for investment properties, but the 1.34 only applies to new purchases. And those purchases can be regardless of down payment. So it could be high ratio purchase, which is less than 20% down, or conventional, which is 20% down plus. But they have to be owner occupied purchases, refinances, or switches. We can't do investment properties at those rates. If you're looking for investment property rates, please reach out to me after the meeting, or if you'd like, if there's enough demand and if you are interested, why don't you guys just leave a comment in the chat that you are interested in seeing rates for investment properties, and I will make sure that the workplace channel on Zolo Mortgages Workplace is updated with those rates. Are we okay to move on to the next slide?
Absolutely, thank you.
Okay, awesome. So this, I think, is one of the most important programs that we have available. And if you're, let's say, I think the majority of you seem like you've had less than 3 years experience. You guys may still be working leases, and it seems like the demographic of people who are lease leads at Zolo are mostly new to Canada clients. So these could be people who are relocated for work. They could be people who are coming here um, on work permit, and they're new immigrants essentially. So their goal is usually to find housing and to find it as soon as possible. And for flexibility reasons, they seem to want to choose leasing. But one of the programs that we have available that we use quite often um, is the New to Canada program. And this applies specifically to people on the legal status of work permit or PR, permanent resident, or student visa. These are really, really great programs that I'm kind of really excited to share with you, because I think that for newer agents, this is going to be something that may change your business. Um, for clients who have recently relocated to Canada, so the limit is 5 years. This program is great. We have a program from a lender that requires no income proof to qualify. All they have to show is 12 months available um, accumulated funds for principal, interest, taxes, and heat. So uh, if they have, let's say, if they're bringing over a large amount of money from their home country, let's say it's even $70,000, we can do a program where we can purchase up to 95% LTV for a client that doesn't have a job yet. And all they have to prove to us is, I have enough money available to make the payments on principal, interest, taxes, and heat for the property. So like right now in the GTA, the condo market is kind of in a slump because people are, kind of dumping condos. That's a great opportunity for new to Canada clients where they can come here, and instead of leasing for just being able to prove that 1 year um, available payment, as I mentioned, they can buy a property at the lower rates now. And when the market is through the pandemic and condos are back in demand, they can sell that property. Like there's really no limit on that option there. So no or low credit history is okay, and this specifically affects people who are new to Canada because essentially they've just come here. They may not have an established credit history. One of the things I mentioned here was they have relocated to Canada in the past 5 years. So if you do have clients who you've worked with in the past that may be new to Canada here on work permit, reach out to them and just say, hey, look, we can get you qualified for a mortgage. We don't need you to have a credit history. All we need is 12 months proof that you have paid one trade and one utility bill on time. So bank statements, or if it's a utility, the utility bill with 1 year history on their rental property that shows that it's been paid on time in full is all we need for credit history. We can use, so these two programs are sort of mutually exclusive. The no income proof program and the no or low credit history program. Um, the details here are sort of 4 different programs. But if you're new to Canada with no income proof and no credit history, as long as you have the 12 months principal, interest, tax, and heat, you're good to go. Or if you've been here for under 5 years and you have good, you have good history of paying off, let's say, a cell phone bill, postpaid cell phone bill for 12 months and one trade, then that's good enough too for credit history. And like I mentioned, we can go all the way up to 95% LTV, which is really exciting. Because basically a client with very little down payment and no credit history can still qualify for rates that I mentioned, like 1.34 for a new immigrant. That's amazing. That's going to be a huge boon for, I think, a lot of your clients who may be looking at leases. The use of funds from abroad is allowed. So essentially what that means is, let's say the client has a large down payment in India. They're allowed to bring that money to Canada and use it towards their down payment here. All we need is the bank statement from India, showing the money leaving their Indian account and arriving in Canada. Based on legal status, there's one thing you need to be aware of, which is that if the client is If the client is not PR, if they are work permit or student visa, depending on the neighborhood that they're buying in, they may be subject to something called NRST. And you may have heard of this. This is called a non-resident speculation tax. This is specifically for Ontario. If you're looking for more details into which neighborhoods are affected by this, there's the Ontario Ministry of Finance website. Just Google NRST, and it will go. It will list the areas that are specifically um, subject to this non-resident speculation tax. It's most of GTA, and if you're working the GTHA, yeah, unfortunately, this affects you as well. But there are areas where, if you are, let's say, a Windsor agent, Windsor is not affected by the NRST. So you can have a student or you can have someone on work permit buy a property in Windsor, and the only thing they'll have to pay will be the land transfer tax. Or if they can prove that they're first-time home buyers, they can still get the huge rebate on land transfer tax as well. So that's reducing costs for your clients, and that's important for you to know. I'm really open to pre-qualifying your clients for new to Canada programs, even if it's a lease lead, and you feel like there's any potential interest there in terms of buying a home in the future. Please refer them to us. We have 30 mortgage agents at Zolo Mortgages. All of them are able to walk the client through the process of getting pre-approved. And I think that one of the best, let's say, available resources that we have as Zolo agents is our bank of lease clients. There may be people who say, "Hey, look, I want to lease, but there may be an opportunity there to buy." So, yeah, reach out to us. We'll be happy to issue pre-approvals for these clients. Any questions I need to address?
Yeah, I mean, there's one here about refugees that do not have their PR status yet. What about them? Are there any programs available for them?
Let me just check. Refugees are a bit of a tough situation. It sort of depends on their specific status, so we'll have to answer that on a case-by-case basis. But I
Okay.
have seen some programs available for them. Usually there is an option available. So reach out to me with the client. We're going to have to look into the client's specifics. And even if they're refugee status, they're given some sort of PR or interim status here in Canada outside of refugee status. So yeah, reach out to me. I'll help you out with those questions on a case-by-case basis.
And what about those who are on work permits?
Yeah, we can definitely do work permits. Just be aware that like we can qualify them for a mortgage based on all the criteria I've told you. Just be aware that if they are looking in these neighborhoods, then they are going to be subject to the non-resident speculation tax. So that's something to be aware of in terms of work permit.
Okay, so they would have to pay the 15% on top, is the question here?
Yes, and that is a closing cost that is quite significant. So I mean, like it can make or break a deal. But the benefit of the NRST is that if the client's objective is to buy a property now, they're able to pay this, and in the next 5 years, they're able to obtain PR status. So if they're able to go from work permit to PR within the next 5 years, the CRA will refund the entire 15% to the client. I'm trying to find that wording, but I can't. There are some exemptions as well. So based on the client status, we'll be able to qualify them. If, let's say, they are a spouse, they don't are not subject. A spouse of a Canadian citizen, I should say, they are not subject to NRST.
And sorry, can you just let us know what NRST stands for, as well as LTV, for those who aren't familiar with those?
Yeah, NRST is non-resident speculation tax. LTV is loan to value, so that's how much your money, how much your clients are putting down, how much money your clients are putting down as a percentage of the purchase price.
Perfect, thanks for that. And when you say no income proof, how much would they have to qualify for? Is it dependent on their down payment?
Yeah, exactly. So like they would still be subject to 3944 in terms of ratios.
Okay.
They would be able to get the rates that I just mentioned, somewhere in the low ones. And yeah, no income proof as long as they have the money available in Canada for 1 year's principal, interest, tax, and heat.
Okay. Um, here's one. Can they get money back after 4 years from closing? They get PR after 4
Yeah,
years?
exactly.
Yeah,
Yeah,
okay.
and that's the part of the rebate of this program that's really important to know is a foreign national who becomes a permanent resident of Canada will get the money back on the NRST, so the non-resident speculation tax. They will have to pay it up front, but they will be receiving it back if they go from either PR or student to, sorry, if they go from work permit or student to PR.
Okay, perfect. Thanks for answering that. So I have a question coming in about first-time home buyers. So just to transition into that for a second. There's a situation here where an agent has had a client who sold their matrimonial home about 4 years ago. She hasn't owned any property since then. Does she qualify for a first-time or as a first-time home buyer again?
It's a great question. We get this a lot. Unfortunately, we are not the ones who can make that decision or provide that advice. That is actually something we need to defer to a lawyer, and the solicitor is the one who goes through the criteria and lets the client know that. Usually now, because real estate law is such a competitive um, field, the client will be able to do some kind of free consult with a lawyer to get that information from a lawyer directly. But uh, us as mortgage agents, we're not able to qualify clients on their first time home buyer status outside of, if they say, hey, look, I've never owned a property in anywhere in the world. Okay, you're a first time home buyer. But if there is some sort of history of ownership there, requalification for first time home buyer ownership should be deferred to a lawyer.
Okay, great. Thank you for that.
Okay, I'm going to keep moving on here. Kind of, I talk too much and we're losing time here. Um, we have a program for self-employed clients, and I think this is one of the areas that has seen quite a significant amount of growth in the past 4 or 5 years. As we're seeing quite a lot of people in the professional industries move from full-time employed status into self-employed contractor status. Um, if you have clients who work in the IT industry or in banking specifically, it seems like that industry has moved really significantly into self-employed contractor income. The benefit, of course, to your client will be that they'll make a higher income because they won't have deduction at source for taxes or what have you, so their gross income will be higher. The sort of the negatives of it are, they may not get the benefits of being an employee, which are health benefits or whatever you have. But just, I wanted to go over this because we're seeing quite a lot of this when it comes to professional industries and clients who have confirmed income on the self-employed side. Specifically, what I mean by confirmed income is they are declaring 100% of their gross income on their taxes. On their T1s, when it comes to employment income, it shows 100% of what their contract income is. We are able to qualify those clients as A side clients. Um, I don't expect you as real estate agents to really sort of retain this knowledge, but it's important for you to know that if this person is in a certain industry and if they say they're self-employed, um, should I be working with them? And the answer is yes. That's kind of what I want you to take away from this. One of the things on the A side that we've seen decline is the stated income program. What is the stated income program? It's when a client is self-employed, they're running a business, and they say, hey, look, I don't declare 100% of my income. I don't even declare 50% of my income. There's about 30 to 20% of the income I do declare. Everything else is cash income. So I can't prove in terms of tax receipts that I do make $100,000 a year, but I do that. So when we have stated income, A-side lenders have started to really pull away from stated income where they say, let's say, look, if you can give us bank statements that show cash deposits and we can backtrack your income and annualize it and prove that you make 100K, those programs have moved to what we're calling the alt or near prime side. And this is where the explosion is really in the mortgage side is In the near prime business, which is rates starting at the low twos, which is still really good. If you look at 3 years ago where the A side rates were, I mean, people who are refinancing now are at somewhere between 2.4 and 2.5% from the A side. The alt side, the near prime side, is now at those rates. So that's really, really important for you to take away to those clients, where you can say to them, hey, I understand you're a truck driver and maybe you're getting most of your income in cash, or maybe you're working as a taxi driver and most of your income is cash, or maybe you own a restaurant. Well, give me some other examples of self-employed income here. Convenience stores, there's some pharmacies in rural towns. All of these people are really, really like they're making a lot of money in cash that they don't really declare, and all we need to show to the lender for them to qualify is 6 months bank statements with invoices. That's it. um, that's all we need to qualify in terms of income for the clients. The lender ends up annualizing this income. So let's say they have a really, really good 6 months um, in terms of cash income. We may be able to qualify that client for a lot more than they would have maybe even a year ago. So um, income proof is flexible on the alt and near prime side, especially for self-employed individuals. It really, really depends on two factors, which is what is the nature of the business? What do they do um, as basically what is the business? Um, are they a farmer? We have a lot of self-employed farmers that do make inquiries for agricultural land. As I mentioned, I think one of the most active categories of people who are looking to borrow is taxi drivers, and as well as what is that type of business. Okay, and the distinction in there is um, the three major types of sort of business establishments allowed are self proprietorship, partnership, and corporation. So when we have someone who is a self proprietor, we're actually able to gross up income and qualify the client for a higher amount. So that definitely helps with some of the smaller business types, especially taxi drivers who are not incorporated. We're able to say, hey, look, this guy's expensing some money for stuff that, you know, is obviously related to his personal life or is just sort of a tax shelter. Uh, we're going to use this to qualify the client for income purposes. That's important for you to know, especially when it comes to tough qualifying, because we actually have some lenders who let us gross up income of sole proprietors and partnerships up to 35%. And that's going to be a huge difference in buying power. This is a segment that we're seeing a lot more inquiries from, which are Uber and Lyft drivers. Unfortunately, there is no lender on the alternate or private side who is willing to look at Uber or Lyft drivers. It's just the nature of the business because they don't actually control any part of that business. The surge pricing, the lease on the car, the pandemic, their rating as a driver also affects the amount of drives that they get. So Uber and Lyft drivers are only private lending. Unfortunately, it seems like a lot of people who've lost their jobs because of the COVID pandemic have resorted to Uber Lyft income, or people are using it as supplementary to their primary income. There's no one who allows us to um, really use that income. But let's say, you know, actually, no, that's not going to work either because the deposits are actually shown on the bank statements as Uber income. And Uber doesn't let us pay with cash in Canada. So yeah, that doesn't really work. But yeah, that we can do a lot of programs for self-employed individuals. Anything for self-employed in terms of questions, Jane?
Yeah, so gross income for self-employed, if they have different sources for self-employment, does that all get considered as gross income?
Yes, we can definitely do that. Essentially, with self-employed income, if the deposits into the bank account are just cash or just deposits with no source listed. So, I mean, if it just says $5,000 deposit at branch, or if it says um, e-transfer, or if it says um, deposit with no actual employer name associated with it, we can use all the deposits to claim income for the client specifically. But what's happening more and more in bank statements now is they're getting extremely specific as to the source of the deposit. So if it says, for example, um, the source of the deposit was um, potentially another employer, we'll have to associate that income with that employer. We can't group it all into one income, for example. I hope that answers the question.
Yes, thank you.
Okay. I do see one more question there. Do you want me to answer the flippers for the mortgage question?
Yeah, I was waiting to see if maybe you got to that in the presentation. Yeah, so you're right. So people who are doing renovations and then selling quickly, what mortgages are available to them?
Let me see if I have a slide for private mortgages. I don't. Okay, so here's what I'll let you guys know. We do have a lot of options available at low interest rates for open term mortgages. A lot of our private lenders now are sort of understanding that um, this flipping industry, especially when it comes to private sales, is really coming um, into prominence, especially in the smaller markets like Hamilton and London, where these flippers are able to offer the clients just quick closing, straight cash, and the flippers themselves are able to within 6 months, let's say, completely transform the property and capitalize on the COVID market and make crazy margins. We see that quite a lot. When it comes to major urban areas, if we're looking at towns like Tri-City, Kitchener-Waterloo, Cambridge, if we're looking on the east side, actually, we haven't really seen a lot of flips on the east side. It's mostly on the west side where the traction seems to be with flipping. London, Niagara, those are the areas that really see attraction. We're able to go down to around 4.99% on a 6-month open term. So the client can, without penalty, leave or either sell or refinance the mortgage. Um, and that's probably one of the best that we have for flippers. When it comes to flipping, there is no one on the A side or the alternate side who's able to do a loan. When it comes to 6-month open terms, our options are limited to or to private lending. So it will be based on the property, and the covenant sort of matters a lot less. So covenant being specifically the credit score of the client or even their income status doesn't really seem to matter for private lending. It's more so the property. And if the private lender is happy with the property, then they're willing to lend for the flips at 6-month open terms. Yeah, so the question always pops up, are we doing anything with commission referrals to real estate agents? Our business model is less so geared to rewarding the real estate agent for giving us a referral. And what we're doing is we're rewarding the client for choosing us as a mortgage brokerage. Um, we try to be as competitive with rates as possible, but that's not our only solution. What we're finding is that a lot of our competitors are doing cash back to clients directly in terms of rebates. That's what we're focusing on as well. If we do any sort of cash back, it's going to be directly to the client. So for you as a real estate agent, maybe that's something that may be beneficial because if your client is expecting a rebate, then point them to the rebate that we'll give them and let us know that in the future this guy is looking, he's shopping around and he's looking for a rebate, and that's what we'll focus on.
That's great to know. Thank you so much. We do have another question here about Zolo agents. So what options do you have for qualifying Zolo agents for a mortgage since we're all independent contractors and self-employed?
Yeah, that's a great question. We actually just had a seminar with a really, really good lender where they told us that we will look at commission-based income and we will look at real estate agents, mortgage agents, and we'll be able to offer, actually, I'm on the right slide here, rates as low as 2.69% for commission income clients. So Yeah, there is a higher risk associated with commission income earners, especially with real estate agents, because there's no base income, and potentially, like whatever's happening with the COVID, you guys are kind of aware right now where the market is for buyers, just crazy, where there's 40 to 50 offers per home. And that means that there's one winner and 39 losers. So, that income is hard to come by. And that's the high risk when it comes to commissioned income that the lenders see. But we can go as low as 2.69% income qualifying. The GDS TDS is somewhere around 45.50 or 50.50 for those programs. So yeah, we'll be able to qualify you. 20% down. Keep that in mind. That's the limit of our program for commissioned income.
Okay, perfect. Great, thank you for that. So yeah, let me know if you guys have any other questions. We do have a few more minutes left. Mihir, maybe if you could just remind us, for those who joined sort of throughout the presentation, how we can refer business to you guys.
Yes, no problem. Here is our contact details, or here are our contact details. Email is mortgages@zolo.ca. This is my phone number directly, so you can reach me here anytime. I am on iPhone, so you can iMessage me. I'm on WhatsApp, so you can WhatsApp me. Call me if you need to as well. Please, if you do have a Zolo client, copy and paste the link in the CRM into your email, or even text me the link in the CRM, so that we can, we have the details of who the client is and all the contact details. We also work on the same system as you guys with the CRM, so we're able to see those details. If you want to make, let's say you have a client who's interested in proceeding with an application, this is the website here. It's zolo.ca/mortgages. I'll just bring it up so you guys can see what it looks like. This is our complete application form, so the client can go through the process, and I'll just bring up mine. Let me see if it brings this up. They can actually return to this application and have it repopulated at any time. And once all of this is filled out, it should come back. Yep, so you can see all the check marks are there. That means it recognized me and it saw what I was looking for. The client can do everything into choosing a rate. That's how far, based on what income they provide and what down payment they provide, the system can actually filter through and offer the client a rate. That's how advanced our front end for the mortgage application side is. So yeah, and we can even get to the point where the clients can submit documents if they're willing to proceed with an application based on the rate that's shown here.
Great, thanks for that, Mihir. So we are getting a few questions. I will just address the last one here that came in. So maybe this is something that might be valuable to post on the workplace group in the mortgages channel. Just kind of a list of questions to ask to find out if a buyer is qualified. So again, for example, with those lease leads, we know that they need at least a credit score of 650. You were mentioning earlier that you can qualify clients who maybe have a lower credit score in the 600. So just wondering if we can get kind of a short list of requirements for buyers, maybe posted on the workplace group.
Yeah, absolutely. That's not a problem. I'll work on that and have it up there for you by today.
Perfect. And then we do have some other questions that came in. Fees associated with private lending, what's the minimum rate? And then what should clients expect to pay?
The fees associated with private lending are based on the property and the location of the property. They can range anywhere from 1% all the way up to 2%. Those fees are lender fees and broker fees, mostly combined, but it depends on the complexity of the deal and the urgency of the deal as well. So if more resources are required for quick closing, then the fees will be higher. That's one thing that addresses that. I see a question here about construction loan. We are exploring this market, and yes, we do have this available to us. We do commercial side lending as well. We have some experienced commercial agents here, and who've done all sorts of businesses, like restaurant financing, all the way up to raw land and huge construction residential projects. So reach out to us, and I will connect you with the correct
Great.
mortgage agent there.
Perfect. Well, thank you so much, Mahir. Thanks, John, for being a part of this again. And yeah, there you go. There's the contact information if you guys need to get a hold of Mahir at Zolo Mortgages. And thank you so much. We'll see you guys on the next webinar. Have a great day, everyone.
Thanks, everybody.
Thanks,
Ciao.
Mahir. Bye.